Hey guys, welcome to this episode of WuBlockchain podcast. I'm your host Shang, and today I'm thrilled to have Kellan from Parcl Labs. Hey Kellan, how are you doing? Thanks for joining.
Thanks for having me, Shang. Yeah, great to be here, representing Parcl and the Parcl Development Company.
Hey, before we start, could you just give a brief intro of yourself? And for those who aren't familiar with Parcl, what it is doing?
Yeah, so I'm Kellan. I'm one of three co-founders of the Parcl DevCo. It's been around for about 2.5 years, and the intent is to create a modern residential real estate at first, data analytics layer, and then a liquid market to get exposure to the asset class, specifically prices of major metros, cities, eventually neighborhoods, countries even, leveraging blockchain technology.
So let's get into, I guess, like the bread and butter of Parcl, which is the price fees. So correct me if I'm wrong, right? So you guys have this unique, fairly updated real estate index that tracks the
Yeah,
median price, or I guess like the general price of major cities, which isn't available so far for other people to participate in. Um, can you just kind of like go a little bit deeper, of course, right or wrong, of how that works and why there hasn't been any similar products before you guys?
yeah, yeah. It's a great question. So what you're describing is a residential real estate price feed developed and published by Parcl Labs, which is the real estate data analytics arm of broader Parcl, um, and it is a completely modern tech stack ingesting all publicly available sources of data that track residential real estate transactions and price changes and any data point that's relevant to the value of a property. It's indexed at the property level, but also a city, a metro area. You can basically draw a circle on a map and out, it'll spit out a median price per square foot. In order to do that, there was over a year of kind of R&D, and data ingestion and model optimization and building a full modern tech stack. And um, ultimately what's happening is there's all sorts of transactions every day, right? Sales, of course, but also price changes, under agreement contracts, and these are all data points. And Parcl Labs made it its mission to capture all of them. At first it focused on North America, but now also in the United Kingdom, in France. Eventually, it'll be Singapore, Hong Kong, Japan, Korea, Australia. So the intent is to kind of index the world's real estate, and the beauty of that is that it allows for this use case that Parcl, through the perps decks, the decentralized application, can spin up a market around any of these prices, with a true long short market with immediate liquidity, and that's both of these things, both the real-time price feed and certainly the decentralized application, are novel. They've never really existed. There's been a few examples of people attempting to do this in kind of the traditional financial system, but classically running into scaling challenges or just an inferior product because of legacy technology, right? Whether it's the data feed that's being referenced or it's the kind of existing financial infrastructure is not well suited to create a liquid market around something like this. There's all sorts of reasons why it hasn't happened yet. And there's all sorts of reasons why, we think the last couple of months kind of proves out that the time is now, right? Everything is kind of come into alignment to allow for this product to take flight. So that's kind of the background. I can get into some of the existing kind of benchmarks or comparables and talk about where their flaws are and what's being improved. Namely the Case-Shiller, especially in the U.S. That's like the benchmark for residential real estate prices. let me know if that, if your audience would be interested in that.
Yeah, definitely. I think there's probably an underappreciation of what you guys are doing because normally, because I kind of argue that this is a product that can live really well outside of crypto, right? Like people, analysts, that they're going to use it. Um, so that'll be great. That'll be great if you can just kind of like get into how difficult it is to just to have this index working because there's suburban areas, there's apartments, and I guess you have to like look into the history of those different apartments because they're different. They're probably a house that was flooded in its history, so of course it's going to be lower than the average houses around this neighborhood. I think it would be nice if we can talk a bit about that.
Yeah, there's a number of ways I can go here, but you made a good point, right? Foundationally, there's nothing that prevents this product from being offered in kind of like a Web 2 or traditional finance sense, certainly on the data side, right? And in many ways, the data arm here is, at minimum, like a hybrid, although there's some things that are happening, I think that'll make it, that'll be very interesting kind of convergence with the data and blockchain. Methodologically, I think what the big kind of unlock here is just taking a modern full suite, bottoms up approach with a modern tech stack. You think about some of the existing, comparable indices. There's really, most of them were created, decades ago. The Case-Shiller was created 40, 50 years ago. And referencing, and the methodology references a housing market, at least in the US, that is way different from what it looks like today, right? So just found, right up front, you have a problem with what's actually being captured. And we did some early work with the Parcl Labs price feeds and kind of benchmarking them to the Case-Shiller. And we started to realize that the Case-Shiller wasn't capturing, like in some cases, in some of its main markets, it wasn't capturing like half of the activity, whereas Parcl Labs was. And that's because Case-Shiller focuses on repeat sales of single family homes. So no first time sales, no condos, no multifamily. That's a lot of the real estate market. And you look around the world and there's been, Australia has a bit more modern, price feed tracking infrastructure. United Kingdom and London has, a home price index that updates. It's a little bit more modern and updates more frequently, but they all kind of have the same issues. And there's all these like various, factors that kind of can lead to not manipulation, but just like these vested interests that have it, that kind of like it's not even a manipulation. The data is not as impartial as you would want it to be, or as unbiased. And Parcl Labs' intention was to create an unbiased view. There's no dog in the fight from Parcl Labs' side on whether prices go up or they go down. We just want to show you what's actually happening, and we want to do it globally. So. And then, lastly, you mentioned in any given market, there's all sorts of nuance, right? Like a house could be foreclosed on and it wasn't taken care of, and that's going to have a much lower price, right, relative to a penthouse condo, or maybe something's in a flood zone, and you have to take that into account, and the insurance policy will be very high, so the value of the property is lower. The methodology solves for this inherently. It's impossible to solve for it perfectly, but we're looking at a population size, right, or a sample size that's quite large. We're looking at New York City or Paris or London or eventually Singapore. That's a very large region, right? And what we're trying to isolate is what is the market price. There's going to be outliers, high and low. Those get kind of adjusted for through the methodology. And what's isolated is here's the median price per square foot or square meter for this region. And that, we believe, is the most representative and the most comparable metric to look at real estate prices. And the beauty of it is it can zoom in and zoom out as much as you want. There's actually a USA price feed live on Parcl right now. That's the whole country, right? 200 million plus properties. And that's, the median price per square foot. And, you benchmark it to the Case-Shiller and it has a very high R squared. Conversely, you can kind of drill down into, like a neighborhood of New York City or a neighborhood within Hong Kong or Shanghai or whatever. And you can see these divergences, right? Like Tribeca has a different price point relative to the Upper East Side or, the Upper West Side or Harlem or wherever. and Parcl Labs data methodology and the price feed, structure allows for those sorts of, altitude, right? We can zoom in and out as much as we want. So there's a lot of flexibility, and as a result, there's a lot of utility for people that are interested in real estate data or people that are interested in getting exposure to these prices through the Parcl trading platform. So it's really exciting.
It's really interesting. Yes, Oracle, the word Oracle, like in crypto, like somehow relates to like price manipulations, right? But I guess like for Parcl real estate is that you have so many houses and you have such a large background history of those different like millions of houses. Even though you were to manipulate, try to manipulate for I guess a liquidation or whatnot, is probably impossible to do so.
Yeah, I mean, almost nothing in the world is impossible, Shang, but I can't think of a harder liquidation to perform through a manipulative act than what you would need to do to perform that on this platform. You would effectively need to secure probably billions of dollars of capital and start buying and selling homes on the ground or properties, right? And like, depending on the level, going back to the last answer, depending on the level of, geography that you're looking at, if you're looking at the whole city of New York, now you need like tens of billions of dollars to actually, begin to affect the Oracle. And then you have a time component, right? Like it takes, weeks, if not months for real estate transactions to close. There's a big legal process. There's all these frictional transaction costs. At some point, someone, there's really no incentive. The incentive becomes moot at some point. So, and then if you think so, like that's like a it's very consistent with the opportunity, right? The opportunity here is because real estate is big and slow and illiquid, that if we have a great data feed, you can create a liquid market around it. But as a result, it's big, slow, and illiquid, so it's harder to manipulate spot. And that's, you create like a kind of seamless Oracle validation process and a trusted data source and a trusted market. And then, once the data gets closer to the blockchain, there's all sort, just like everything else, there's vectors for security concerns. But that's been, the development company has considered that very closely from day one. There's mechanisms in place to minimize that risk surface. So, and over time, I think just like anything, progressive decentralization makes a lot of sense, right? Not early on, you want like probably more centralization early on for a lot of applications. But as you move along and reach some level of scale and create redundancy, especially around the price feed, you are creating decentralization, which benefits everyone in the network and creates more efficiency. So I think that's probably the path forward with regard to, specifically to your point around, the price feed, the Oracle, manipulation vectors, et cetera.
Nice. Like following up on, the comment around like it is a real world asset that is very valuable on its own, right? What was the thought process behind just making it a perpetual exchange on chain? Like what
Yeah.
why do you want to make it a crypto product?
Yeah, it's a great question. I think the big unlock with crypto is the vision, or the genesis story with Parcl was myself and one of the other co-founders we were working at a hedge fund, and COVID is happening, and we're like, oh my gosh, there's all of this asset volatility. There's all these structural shifts with work from home and just this new paradigm around where the relationship between where people lived and where they worked. And we wanted to get long Miami and short New York, or long Austin, Texas and short San Francisco, or I'm sure there was a trade in London where you could probably get long like Lisbon in Portugal and short London. Like that was the trade, like a pair trade, market neutral, because that's what we were most familiar with at a hedge fund. And in order to put a trade like that on, you want a really liquid market, something that moves and instantaneously you can get in and out of. The transaction costs are low friction. It's ideally there's like global availability of capital, and to do that with there's really there was no way to do that in the traditional financial system with this asset class in particular, right? There's just no good way, especially on the short side, to get this exposure on. And so we started to think about how this made the most sense, and we realized we kind of touched on the data problem. That was like a foundational problem. There needed to be a price feed. It didn't exist third party, so it had to be created. On the blockchain side, it was like, well, DeFi is kind of coming into its I guess like origin window, right? For the first time, DeFi had the technical infrastructure to support these kind of novel use cases. It might have been a little early in 2021, but you could see that it was headed that direction. And then, a layer deeper, Solana kind of ticked every box, right? Global availability of capital, NASDAQ's, level speed, transaction costs that were effectively zero. And the main, the only main concern thereafter was like centralization of the network and network of, reliability. And I think it's made a lot of strides over the past 2+ years on that front. So it became pretty clear that the best way to offer this product was on chain, and that if there was any technology that could unlock the true promise of this concept, it would be blockchain, and specifically Solana's blockchain. So that was the thought process, and then perps kind of came a little later than it should have. There was 2 versions before the current version, which is called V3, which is the true perpetual decentralized exchange. The one before was what we referred to as like a PvP AMM, virtual AMM, but like more of a PvP style. And the one before that, the first version, was like a over collateralized debt position, like a mint, over collateralize and mint, and then pull it into an AMM. Each version has gotten us closer to the best version, and I think the current version is a pretty damn close. And I think that the market is responding accordingly. If you see just like what volume has been like and how many people are using it, and anecdotally how many people are having a really good experience, both what I would call like smaller traders and really large traders, including some traders that have like an institutional background. And I think that's the end state here. This is like a hybrid product that can serve both retail and institutional, can unlock liquidity, can provide real world utility through some of these use cases like hedging your primary residence or hedging a bridge financing for a large construction developer that's working on a project that won't be completed for 6 to 12 months. There's a lot of risk there, right? And there's no good way to offload that risk. And here is a tool that is very effective at doing that. And I think perps as a meta are inevitable. Perps are a superior financial instrument for many, many use cases. And I think they fit really well with this one, and specifically this architecture.
And obviously, I think of so many use cases that have like real impacts to people's lives. I mean, as you said, there's contractors, as you said, there are people who cannot sell their home because they live in it, but they are bearish on the price of their areas. How far away do you think Parcl is from this kind of quote unquote like real users? Because now you have the data, now you have the TVL, but there are definitely a lot of things to onboard them, right? For example, you need their wallets, and they're probably regulatory pressures. If their companies is different, and I say they're probably different factors.
Yeah, there's all sorts of factors. I don't have a great answer on how far we are from like that utopia where everyone using Parcl, it's like a perfect ecosystem, and you have all of these amazing real world use cases that can be unlocked. One that I didn't even mention is like synthetic insurance, right? In that example where there's a property that's right near the flood line, you could use Parcl, right, to actually insure or provide some sort of a synthetic insurance product around that, that risk. There's like you mentioned, there's all sorts of factors. There's liquidity and kind of scale of the market. The larger, the better, obviously, to unlock, especially the institutional use cases, because they want, they have large exposure, and they don't want to, they want the costs of their hedge or their risk optimization strategy to be very low. Then there's, there's like the regulatory kind of framework that this falls under, and I think that plenty needs to happen on that front, and I'm optimistic that it will. And then there's there's just like the awareness raising, and then I think one other thing that kind of ties to the first one is just like the efficiency of the market. I think that in order to really unlock some of these like buy and hold or short and hold strategies, right, where you're actually using it as an insurance product or actually using it to hedge your primary residence over a long period of time, those users want like a more certain kind of cost of capital, and that's expressed through the funding rate, as we know, on perps, right? And this asset class is low volatility, so I think that over time these funding rates should trend towards somewhere in the mid single digits, right, in terms of cost of capital. Once that happens, then it unlocks everything, and I think you'll see a lot of efficiency and a lot of these real world use cases popping up, and then you'll see the people that are deploying those real world use cases or deploying those strategies around real world use cases finding like a really efficient market, which would be fantastic.
Are you guys planning to do more products building on top of the data fees, or is it just perps, and then you plan to just focus on that?
I think perps. I think first you'll see more products as perps, right? Rental price feeds, commercial real estate price feeds. We've discussed a couple times with the support of the community, like foreign exchange to help unlock some of these international or these global markets. So stay tuned on that. And then kind of further down the line, I would expect to see, a developer ecosystem perhaps built around Parcl as like the base liquidity layer for liquid real estate exposure. All sorts of things could be built on top of that. You could have a protocol that specializes in the synthetic insurance solution. You could have a protocol that specializes in like creating indexes of the indexes. Like, I only want exposure to the top 20 blue chip cities in the world. All right, now there's an index for that. You can think of it almost like an ETF, right? It's not the same in many ways, but conceptually similar. So those are the two paths, right? New real estate price feeds that could be productized and brought onto the perps exchange, and then a ecosystem building products on top of the base liquidity layer, on top of the perps exchange, that unlock all these new strategies and solutions.
Got it. And how does Parcl token going to be a part of this?
How would it be a part of that second one?
Yeah, I mean, just overall, like, what is going to be the utility of the Parcl token?
Oh, the Parcl token, yeah. So, Parcl Limited, which is independent issuer of the network token that's going to underpin the Parcl ecosystem and spearhead the progressive decentralization. It will be a governance token first and foremost to govern exchange parameters, the implementation of new markets, of new assets like the ones I just mentioned, rental price feeds, etc. I think that the token holders or the governance participants will have a lot of good input with regard to understanding if something's ready to be productized. This has been tested actually already through like a community vote in Discord. It was basically presented to the community. Would you trade London and Paris price feeds in US dollars in USDC stablecoin, because that's the only collateral asset on Parcl today? Or would you want a solution, a native solution for foreign exchange risk? And they actually voted, the community voted, over 2,500 folks voted on this. And they chose option 2, which was we'd rather wait for a native foreign exchange solution. That is like for a product like this, or for an application like this, or decentralized exchange like this, that is a perfect example of high quality governance. You don't want to create risk. You want to deliver a product that people are actually going to use, and not introduce these extraneous factors that could impact performance. So I think that's great. So that's one, governance. Two, and this is really unique, it will be the token will be used to unlock access to Parcl Labs API, which is the real estate API. And I obviously played around with that API a bunch. You can, there's all sorts of very interesting things you can do with that. There's a ChatGPT plugin where you can link up to the Parcl Labs API and query all sorts of real estate insights that you really can't get anywhere else, at least not in real time. And it'll spit out charts and data and code. And I think that'll be super interesting. I can't wait to see how, people in the ecosystem, network token holders, utilize that as a benefit of being part of this ecosystem or this protocol. I think that's going to be huge. And I think that it may end up being one of the most, valuable parts of being a part of the Parcl ecosystem down the line. There's institutions that would have real utility for that have a real use for that utility. And then the last one is participating in ongoing network incentives. So, the points program is kind of migrating into a perpetual points program. And that's basically, if you're participating in this ecosystem, there's a leaderboard to track how much you've contributed. And I think that with now there being a network token, there's now a way to kind of give folks more governance power, or more access to the data, or more, kind of like participation in the ecosystem based on how much they're using the protocol, right? And it's like this virtuous flywheel, which I think is really exciting. And I think network tokens, whether they're governance tokens or otherwise, can unlock a lot of this, right? I think it's the beauty of crypto. If used correctly for real world applications like this, the sky is the limit. So those are the three pillars of the network token as we understand it.
This is awesome to hear. Yeah, thanks so much for coming. I know you had such a busy schedule, so obviously appreciate you coming on. Token DG coming soon, I guess. There are no comments.
Yeah. The latest from Parcl Limited is that it's going to happen sometime in April. So I think within the next couple of weeks, and we're all waiting patiently. The community's very excited, and I think it's a great time to be involved with Parcl. So if you aren't already, please check it out. There's all sorts of resources in the Discord, on Twitter, all sorts of longer form content around these real world utilities that I kind of touched on earlier, and some information on a lot of these roadmap items that I mentioned.
Nice. Well, thank you so much for coming on, man. Hopefully we can get another episode once you have more cities and the token coming in.
Yeah, once there's maybe with the first one or two developed Asia or greater Asia market launches, we should get another one, and we'll walk through the nitty-gritty details of methodology and trends, and what opportunities there are to get exposure.
I would love to.
Amazing. Thanks, Shane. Thanks for having me on.
Thanks.